Australian dollar trended lower this week, though mostly due to a stronger US dollar. The greenback was boosted particularly against the Japanese yen and the Swiss franc, which are seen as safe haven currencies. This seemed to be in response to less economic damage from Hurricane Irma than had been feared. The US dollar also gained some support from signs of cooperation from President Trump and the opposition politicians. Last week, Trump did a deal with Democratic leaders Pelosi and Schumer to fund the government through December and to suspend the US debt ceiling. This week, Schumer and Pelosi were invited to dinner at the White House, where topics under discussion included doing a deal on immigration, and there was also a big push this week for corporate tax cuts. That supported US yields, which had been quite low into the weekend. Indeed, the 10-year Treasury yield rose from about 2% to about 2.2%. Also, markets are becoming a little more confident that the Fed may raise interest rates by year end. Pricing for a rate hike at the December meeting increased from about 30% to almost 50%. The stronger US dollar was the main driver for the fall in the Aussie dollar from highs above 81 cents to below 80 cents. Indeed, the domestic data in Australia was mostly quite encouraging. We had a strong reading on business confidence, an improvement in consumer sentiment, although it remains fairly soft overall, but a very spectacular rise in employment in August. Total jobs rose 54,000, that was much stronger than expected. And again, full-time employment led the way. Full-time employment is now up about 3% over the past year. The unemployment rate, however, held steady at 5.6 as there was an increase in the participation rate with people attracted to joining the labour force. So the Aussie dollar did bounce on the employment numbers, though only modestly. It's likely to be limited so long as the RBA is seen keeping interest rates on hold. Indeed, market pricing for an RBA rate hike by February next year is still only about 25 to 30%. The Australian dollar may be down only modestly against the US dollar over the past week, but it fell more than 2% against the British pound over the week. Boosting the pound was the Bank of England monetary policy statement, where they made it clear that while they didn't raise interest rates from 0.25%, they were planning to do so in the coming months. Sterling rose sharply in response to the Bank of England statement, with the Aussie dollar falling to a 2-month low against sterling. In the week ahead, Australia's data calendar is effectively empty, though on Tuesday we will see the minutes from the Reserve Bank of Australia's September meeting. Internationally, we have the Bank of Japan policy meeting, where expectations are very much for on-hold policy. The global focus, of course, will be on the Federal Reserve's FOMC policy meeting. Markets are pricing almost a 100% probability of the funds rate remaining at 1 to 1.25%. But this is a quarterly meeting where we get a lengthy press conference from Fed Chair Yellen and also updated forecasts. So there'll be a lot of interest in where the Fed sees inflation, growth and interest rates heading. Overall, we expect the US dollar to continue to find support from optimism that a deal will be done on tax cuts. There may be a bit of a wobble, admittedly, after the FOMC statement if they do trim some of their key forecasts. But this should leave the Aussie dollar trading mostly a 79 to 81 cent range. We suspect that with that firmer US dollar, it'll spend most of its time towards the lower end of that range. We'll speak to you next week.